Good afternoon, I'm JT Engstrom, Chief Strategy Officer at FreightWaves. Welcome to this episode of Fuller Speed Ahead. I'm with Spencer Tenney. Spencer is a specialist in surface transportation M&A. Spencer, welcome to Chattanooga, Tennessee.
Good to be with you, JT.
Now I understand your trip here to Chattanooga wasn't that long of a drive. You came from a little bit outside Nashville?
Just Franklin, Tennessee, just a little, got to skip down the road, yeah.
And that's a pretty drive too.
Oh, it is. It's very nice.
Okay, and now, you told me that you've been in Nashville, the general area, since about 2005.
Yes.
Can you tell me a little bit about how you got there and what you were doing before? And I know that kind of ties into what you're doing presently.
So, it's a family-owned business, and so my family's been in transportation for 65 plus years, but my reason for Nashville is I have a little bit of a songwriting bug in me, and back at that time I was a single man and could do M&A anywhere. And so I came out here to be part of the songwriting community, and just an amazing place, an amazing community. It was just a great experience.
That's awesome. So were you songwriting and doing M&A at the same time?
I was. And clearly I was better at one than the other. So there you go.
That's awesome. And so as you've come to learn a little bit, I've done some M&A in my past.
Yes, sir.
Across the same exact market that it sounds like you're focusing on. So I think this will be a fun discussion, and I'm really interested to see how this discussion develops.
Me too.
So with that, can you tell us a little bit about the family business and then how you got into it, besides kind of the obvious, maybe what the first day, week, month was like, and then perhaps talk to us a little bit about your first deal way back when?
Yeah, so that's interesting. Well, again, my dad owned several different types of transportation businesses, which as a result of doing well, I started consulting, started helping companies acquire, and then they'd say, can you help me sell it? And that just kind of a natural evolution kind of got us into brokering deals.
Yep.
And I didn't want any part of it. When I grew up, my only memories of my dad were, if I wanted to see him, I had to go to the shop and work with him, get a broom. So I was kind of resentful for that, but very clearly I learned how hard business owners work, what's required to be in this industry and what's required to be successful. And so it kind of became a calling for me as life went on to say, hey, because I know what's here, I felt really responsible that I could help these people. When it came time to make the most and capitalize on what's 90-100% of their total net worth tied up in these businesses. And so
sometimes more than 100%.
Maybe sometimes more, but I think that the trucking industry, the people in logistics industry, some of the most talented, hard-working, down-to-earth folks. Yep. Most of which, when it comes to their business sale, they want to do something for others. They want to be impactful with their community. They want to take care of their employees, and so. Because there's some complications with this industry that makes it a little difficult, specific to transportation, we try to provide a process to get those pitfalls out of the way so that they can get a deal done and be impactful with their business sales. So early on, I'm trying to think, what was my first deal? So you're asking about.
First deal is always an interesting one because
I want to say
trying to accomplish a lot of things you've never done before.
I know, and luckily I wasn't totally on my own. I had some support, but I think I did a little passenger transportation deal out in Florida as my kind of first solo situation, and it was a neat deal. I mean, there's always little stories about it. I can remember my buyer's wife came to a meeting and she was intoxicated and almost blew the whole deal up. But it was pretty comical, but it was foreshadowing of many things that were to come about challenges of deal making, but also how sweet it was to help my client move on and start a new chapter of life.
Yeah. People always ask me what was one of the biggest things I really enjoyed and also remember about doing deals, and I think it's the sheer adrenaline rush that comes with really trying to progress things and move the chains constantly, and also the complete unknowns that come associated with any deal. And to your point, to your story, it's typically something completely out of left field and something to do with an interpersonal interaction, which typically comes associated with levels of high stress, high anxiety, and third-party players coming into the fringe, trying to involve themselves. And so that's an interesting story. So can you tell us a little bit about now rolling forward towards your current practice, what you're seeing in the market, the types of things you're active on? Obviously, you can't talk about live deals. I'm not asking that, but any general color you can provide.
Sure. So, I mean, 100% of what we're going to do is going to be transportation and logistics.
That's cool.
And so most of that's going to be in the lower middle market, which from a revenue standpoint, most of it's going to be between 20 and 300 million in annual revenue as far as what we'll work on. But you know, right now we've got anything from final mile to refrigerated to dry van to some liquid bulk. We've got some 3PL. We got a little bit of mix of everything in terms of what we're doing. In terms of done deals, done 8 transactions in the last 12 months. Most recently, the deal with Lindstar and Forward Air, which was a $90 million final mile. Great company.
That's awesome.
Great company. So
that's awesome.
But again, a lot of, like the profile, a lot of these folks are. It's high stakes. I mean, there's not a whole lot of margin for error, and when you have a low margin industry, it makes it that much more important that this process goes well. So we take great pride in that, and you know, our team is just constantly, like you talk about having a little bit of a hiccup. You know, we're constantly trying to figure out what we can do to protect them from that. But when we do, use what we've learned through 47 years of doing this to try to make it as smooth as possible for our clients.
That's tremendous. And now, I think a lot of your clients are first-time business sellers. Is that right?
Oh, almost all of them, yeah.
And so maybe if we have a little bit of a discussion around what happens when you go through a sale process, what are some of the things these first-time business business owners selling their businesses learn in retrospect that they always kind of tell future sellers, hey, you should think about this and understand this. I think there's a lot of areas that come up in M&A that first-time sellers don't really realize until they find themselves at the table. And some areas that I've observed in my past that come to mind parlay to, the difference between an asset and a stock purchase or sale, tax ramifications of both geography, both the types of transaction, what a roll or an earnout might look like, what continuing involvement in the business may be, how to renegotiate an employment contract once you no longer own the business, the benefits of working with a personal wealth advisor before the actual close of the transaction.
I mean, those are all great things. I think that's just kind of like, I mean, you and I could probably build a checklist that is
so many, right?
Pretty extensive, but I would say probably the 3 most common themes that I hear. Number 1, probably started too late.
Yep.
Or later than I would have liked, because I could have got my tax and my wealth strategy a little bit more continuity. I could have prepared a little bit more. Some of it's just emotionally preparing for the process. When you're aware about the deal structures that you're going to see, and you have time to digest it. Because I think what happens is, for the first-time seller, when they get in that environment, everything's new. They don't trust much of anything because it's new. But when you have time to kind of prepare yourself, this is what it's going to look like, this is what you're going to see, and then in fact you do see those things, more than likely you're going to be more controlled in the process, and you're going to have a better result. So that would be one thing. The second thing is that they learn that their goals evolve over the course of the process. I don't mean necessarily price. An example of this is a recent deal that we did. Initially it was all about the money, just give me the best money that I can get. And then ultimately, when we had 6 offers laid across the table, all different structures, he ended up taking an offer that was $10 million below the highest offer, because it allowed him to fulfill his commitment to his community and to his people by keeping them in the town of where they were currently. Otherwise, they would have had to relocate the whole leadership team.
Yep.
So I think just kind of like, hey, keep an open mind.
Yep.
And then the third thing I think is just realizing that it's not just about what happens at the closing table. Maximizing a sale is both before, during, and after from a wealth management and deployment strategy. And when you kind of think of it in those terms, it allows a lot more flexibility to get the right deal done.
Absolutely, I couldn't agree more. And I think you bucketed that in a very thoughtful fashion. Now, maybe could we talk a little bit about sort of the difference of thinking through a strategic sale versus dealing with a financial sponsor, and how that parlays into expectations on an ongoing basis?
I think really, it really comes down to post-transaction strategies and expectations of what's going to happen there, and deal structure as well.
Yeah.
A strategic's going to structure a deal very differently from a private equity, and if owners know that, whoever the industry and related experience has a lot to do with what kind of structure that a seller will accept. I mean, if they are creditworthy, it can really open up some doors about how they can capitalize on the deal itself. So I think that has a lot to do with it. But some of it's just personality, it's culture. There's a very different private equity culture than a strategic. It's kind of easier to match that up. And again, back to the the expectations about goals evolving. Once kind of people get in there and they get the feel, they're like, hey, this company or this buyer, they're the trustees of my legacy.
Right.
And sometimes, the comfort level is very different between one or the other.
For sure. And that's a big deal. And I think you said it well, trustees of my legacy, that really truly is, especially in the domestic sort of lower middle market surface transportation space. A lot of these are, family born and bred businesses.
Yeah, you got 100-year reputation on the line.
You're not just selling an asset, you're selling your blood, sweat, and tears for multi-decades into the past.
Yeah.
So that's all great commentary. So now maybe we'll talk looking forward, less about deal structure, more so about kind of what are you seeing in the market? How are you seeing the market evolve? What are you seeing in terms of general trends, in terms of deal making? Obviously, there have been a big LBO wave over the past 5 to 10 years. Kind of what are you seeing as thematic within the space?
Well, I mean, we're still demographically, just at a place where there's just a tremendous supply of businesses that either need to sell or should be selling just based on age. I mean, if they have a successor, that's one thing, but if they don't, that has a lot to do with driving activity. But I think from a structure standpoint, because of the current disruption between insurance, between a host of different other things, I think that has influenced deal structure and valuations to some degree. Driver shortage certainly has some impact on that as well.
Yeah.
And then also, you talk about, the used truck market, that has some impact.
Yeah.
When you dump multi-thousand trucks into the used truck market.
Yeah.
What other folks thought that, hey, at least I could liquidate my equipment, are like, well, actually, no.
Right.
That's not going to play well. Like,
no, it doesn't work well.
We have to, in order for you to have any type of protection or preservation of wealth, we got to have some type of transfer, because it's very difficult for any buyer to put value on used trucks if there's not drivers and or revenue attached to it.
Plus, then you still own the liabilities.
Exactly. So I think that there's going to be a lot of deals being made, but like with supply and demand, I think that you got that the amount of quality, stable good companies is going to be shrinking, and because of that, valuations for those specific companies are going to go up. But for the rest of the companies that don't kind of meet that profile or that standard, it's going to be tough.
Now, in terms of subsector level supply and demand dynamics, there's been a lot of interest for asset-light businesses. I think there's been a lot of people raising their hands in sort of the domestic drive-in asset-based side of the house. Kind of, what markets do you see as most beneficial for a seller versus most favorable for a buyer right now?
Certainly the asset light. I think that just because there's more interest right now, when you have a larger pool of motivated buyers, it makes it easier to get a deal done just on pure volume. So that the asset light companies that are interested in doing a transition, I think that's pretty important right now. For the other folks, it's very cyclical, and I was telling Craig before we got in here, I just think it's a little bit difficult to tell. It's not, to try to be reactionary right now. It's difficult for me to make sense of. I don't really know. But in general, I think that if you're not doing something proactive and pretty bold on the business development side, then it's going to be a pretty painful next couple of years. Yeah. And so
I think that's right.
So I think so the good news is that's creating opportunities for everybody, because it's bringing more buyers regardless of performance. And so I think that there is some opportunities as long as people are being proactive at both sides of the table. I think there can be win-win scenarios across the board.
I think that's right. I think that's a good note to end on as well. So with that, thank you all for joining this episode of Fuller Speed Ahead with JT Engstrom. If you haven't yet, please do check us out on FreightWaves.com. Please check out Sonar. 5.0 has been released. 6.0 will be coming out. It is our proprietary market intelligence tool. It can help you understand the fundamental dynamics of all these businesses we just talked about. With that, thank you, Spencer, for coming to Chattanooga. Please join us again. Talk to you guys soon.